Hello everyone, welcome back to another video. In today's video, we're going to discuss the live markets using, of course, the profile charts and the footprint charts. So what we have in front of us is the bank Nifty. We can do it in Nifty as well, but since it is a little more volatile, so we'll be able to, understand and look at certain concepts of the footprint and volume profile a little more and rather in a faster manner. So this is a 5-minute chart of volume profile chart for the bank Nifty. So I'll just discuss rather it's quite evident what we are seeing in the in the last session and today what is happening is, so if you see, this was an uptrend day. That is nothing extraordinary, it happens, and today we are getting a sort of a retracement back, and if you look at this profile, so the two places where you see, it cannot be called a double distribution. I'll just go into the market profile chart as well. So you see these three nodes, okay? So never be too held on with the fact that there are three distributions, four distribution, it'll break one, it'll, these are, just consider them as nodes. This was a really good high volume node with a lot of volume transacted over here. What we did is immediately in the first hour itself, we broken down below it. So obviously what the market generally tries to do is, if it has done that, it'll fill this area that has been left. I'll just delete this whole thing. So this low volume node, the market will generally try and fill, and if it doesn't hold this particular place, you see this this chunk, okay, in fact it is still here, okay, this another volume chunk, it'll try and hold. If it doesn't hold, it'll go through and touch this part. So this particular concept is valid across, it's something from the market profile, even in the volume profile. So when you see these small chunks happening and there is a separation by a small volume node, a low volume node, what you should generally see a rejection that you saw over here. And if it is not holding, and if we enter this particular volume cluster, we generally going to target the other side if we do enter. That is the other place that we might find resistances. And when you're looking for targets like on an intraday time frame or a 15-minute time frame, like for example 100 points or even 200 points on bank Nifty, what you should always remember when you are looking at these places is that the first place you might face a sort of a resistance is the next high low volume node is somewhere here. Before that, this is the VWAP of yesterday, where you might face a sort of a resistance and a pullback. So as soon as this low volume node enter, if you look along, even if you're a price action trader, this is a really good point. If you see, the market did break out from here and it took resistance. So it's quite evident on the chart. Let me do one more thing. I'll just go into the market profile chart as well, even for people who are not familiar with it. I'll just tell you a small concept. So when you look at a profile chart and you look these shapes, we'll discuss that sometime later, but what happens is, over a period of time, when you look at these shapes, okay, so for example, this is a balanced shape, this is a P profile shape. We'll not get into the details of what they mean. Just understand that the market spends time over here. It tries to break down of this zone, it fails, and goes above. So obviously someone was interested in taking the prices higher at this time. It tested the lows, or exactly the low of this day, and turned back even before that. So that is a significant clue that there is a bullish tone in the environment. Okay, now let's go at this. This can be considered a trend day, but if you look at this profile a little more deeply, you see there was again a balanced sort of an area, and then something like this. So this structure we generally call a ledge, and more often than not, again, the percentages are not high, but 70 to 60 to 70% of the times, I don't remember the exact this thing, again, for different markets is different, but if you look at the books by James Darton and Peter Stadelmeier, you generally find them saying that there is a higher percentage that, and the odds that if it doesn't sustain above this zone, or some people call it the spike, there are 4 periods, so I wouldn't call it exactly a spike. What it will do is it'll fill up the ledge, okay, the next day, and this acts as a sort of a support if the market is in a bullish tone. So I'll just mark this area as well. So if you see, this is the area what we just saw on a volume profile as well, and this is the place where we generally tend not to take support from. I have never traded like that. What I generally try and do is, when I see the market not sustain in the first half an hour, 1 hour, this is my target. Okay, so I do not trade it like this going to act as a support. There's a low volume node. This is the target. So whenever the market opens and does something like this, I expect it to at least touch this point and then move wherever if it has to move, if it has to move. Okay, so this is a way to look at it from the market profile chart. So this generally you won't find in a volume profile, because the time concept it, or the time this angle is not taken considered into the volume profile chart. So this is the zone which I've exactly drawn. Okay, now let's move on and get into the footprint charts. I know a lot of you guys would be wanting to look over there as well. So I will just go ahead and tell you, if you look at the price action also, and this is the way that it has been happening. Okay, so and it is still taking support, and you see a small volume node. We'll just into a footprint chart and see what is actually happening here. And the market this is the second time it is trying to break, and it has failed. Okay, as of now it is failed. And if you've heard look down and fail, and look below and fail, it's a concept on market profile, and it is quite valid on each and every time frame. Now whenever you're looking at these charts, just look at the small nuances. For example, if you're looking at this 5-minute charts, you can have a timer sort of a thing, a market profile concept. I've done a video on internal clock of the market, so something like that at every possible time frame. So what do I mean by that? If you look at this chart, okay, you look at the low, and the market comes and tests this low, and it is not even tested. So that is an interesting part. So what I'm trying to get at, it's not even tested the low. So what do you think is here? What do you think people have here? They generally, of course, have stop losses. If it is not tested, not that it wouldn't, but if it does this for another, I mean, 10-15 minutes or another 3-4 candles, and then we have a very good chance of it testing the VWAP. So that is where you can take an intraday trade. Now the second part is, a lot of people, when we are new, even now, sometimes when I'm into a scalp or something, we generally try and get into a trade too early without a confirmation. So for people who say that price is not important, it is certainly. I mean, it is advertising mechanism. Of course, that is what James Alton says, but you have to look where it goes, and is it doing what it wants to do. Even in volume spread analysis, I've done a video a few days back. So what we want is a confirmation. How do we get a confirmation that we are thinking that this zone is going to hold? How do we get a confirmation that it is going to hold? There are three things that we can look at. Firstly, we look at the delta. I'll just go into the footprint chart and show you. We look at the delta, we look at the volumes that have transacted here, and we look at the fact that a lot of, let's say, sellers would have been absorbed here, and in spite of that, the market has not breached the second time it came around. In fact, it did not even test the low. So that is a tell. Okay, so again, it is too early. So when do we get into a long if you have to target this? It's something like this. So the first place when I was actually expecting it to go ahead and test the VWAP is somewhere here. Why? I will just show you. Of course, this is also very common. Some people call it the M pattern or whatever, but this is where I was expecting the market to actually go and test this area, but it did fail at this this juncture, where you see a small node and I mean a selling coming from here. Why was I expecting that? If you look at the volumes, now this is where it becomes interesting. If you look at this these bars, okay, this one, it has, I will just expand it so that you can see it properly. A lot of you guys requested that the charts be expanded, so I will just do this before we get into the other chart, that is the options chart. So if you look over here, this is the first bar. I will just start marking where we had above average volume. Again, how do I know that? I've done a video just a few days back as to how to make these charts look like this. The second one I see is the bar over here, okay, where the bar doesn't even close at the lows. It's almost, I mean, there is of course there's been a delta sort of an absorption. We'll just go into another chart where we'll look into it, and the next time it happens is on this bar, which is very interesting. Okay, this one. So if you look at the volumes, and again I'll go into that, there was sort of an absorption that has taken place in this bar, a high volume bar, and look at the spread. It is so obviously someone was trying to take the market lower and he failed, and this was the first attempt. Now it doesn't, what I was expecting of course was a pullback till this place, till this POC over here and touch over here. It didn't do that. It comes down. So obviously if you have entered a trade, you would have had a stop loss here. Even if not, what I generally prefer is, if I see this failure by a bar like this, I generally trail my stop loss. It's okay to, I mean, exit early. If it is not, we don't know what is happening. So you see what is happening. The market is again trying to go up. So it does do this a lot of times. It will take out another weak hands, and sometimes it even goes below, flushes out people. And again, I keep saying that if it does that and the time it spends below is really minuscule, let's say less than 30 seconds, and it comes back again, that is your trigger to go, in fact, early without even a confirmation. Because I mean, of course, you need to have context behind you, not that you enter blindly. But it is because the market was trying to take out weak hands and going above. Now, the other thing, you should always have everything in your mind when you're entering a trade. Okay, so we were bullish at this point for a reason that we just discussed. But the other thing you need to do is, it has broken this point again, and I understand that there are people who try to push it above till the VWAP. But the other thing you need to understand is, what is the other scenario that can happen. This can keep happening for a lot of time, and it can keep breaking down. So what you do is just what we discussed. You if you enter a trade somewhere here that is at this, just below this level, we'll just go into the details. If you're trading into options, where is exactly the point you enter into options, because a lot of you guys trade options. Okay, so you, like we just discussed, when you see a bar like this, you get out. Okay, now the other thing that we are seeing when this second move happens is, look at the volumes. Okay, look at these volumes when it is coming down. Absolutely, in fact, this up volume was less. That is why the move did not sustain. And that was also the trigger where I mean, you can think why the up move might not be ready as of now. And look at this volume, the down bar volume. Okay, and almost all of it has been taken out. Okay, so again, nothing is sure. We have to wait. It can keep doing this. The only thing we can do is, we can have a stop losses, and we can trail them as and when expected. So at the moment, when I look at this chart, I don't see I mean, at the moment, I don't see a continuation. Of course, if we break this, I will just mark that zone for you. So if we break this zone, that is this one. Okay, and that is just below this VWAP. If you can see this yesterday's VWAP, we are surely going to this point. I'll mark that place as well. So that is another trade that you take whenever you start getting aggressive, when you see something like that and the bar close below it. I always say it's always important for a confirmation. Just don't blindly get into any trade. Always wait for a confirmation. In our earlier days, we generally end up getting early, and then we see the market actually going to the place we really expected it to go. Okay, so let's delete everything, and then I will get into the footprint charts. Okay, now I'll just go back. So if for people's consumption, what I have here is a bind. Okay, so I have the P's and the C's here, so I can take a trade looking at both. The context I take from, of course, the Bank Nifty chart, that is the market profile of Bank Nifty futures, that is, and the volume profile of Bank Nifty futures. But the entry, of course, is looking at these charts. Again, these charts I have discussed a few days back, how to set them up. Again, the volume plays an important role. You would generally see that at the money options, like we have something over here, 245 to 46. So what you can do is you can just drag and drop and you'll get it. So if you look at where the price is actually right now, it's somewhere close to 48,400. So what we have here is 48,300 P. In fact, it is just in the money. You can go a little bit even out of the in the money, rather, 338, which I generally prefer. So what we'll do, it will get this 338 because we're looking to scalp, and we want more points and more movements in a short period of time. So you can go ahead and do 290 also, just in the money, or whatever you want. So let's take at the money, exactly at the money. Okay, 290. And what will happen is, generally these at the money prices will have a good correlationship with the volume that you have here. Okay, so if you look, the volumes before would have been lesser at this point, because at that point the let's say the P or the P would have been a lot lesser, and now it has started gaining volume because it's started going here. So you I mean, that is why I look at the volume profile of the Bank Nifty and the market profile of Bank Nifty. But when I'm about to take a trade, I certainly look at the areas of importance over here. The next thing I'm going to do is shift to a Bank Nifty footprint chart. Okay, so this is what we have. Now I'll go into the bar that I was discussing. So if you look at this bar, okay, this is the third bar that I was talking about. Look at the spread over here, and look at the delta over here. Okay, which is significantly higher than even this bar. okay, this bar that I'm talking about, the spread was really high. Look at the delta and look at this delta, not significantly, I mean in proportion it was almost equal, I'm sorry for that, but look at the bar spread, the range is really less. The volumes were almost similar, the delta again in proportion were almost similar, but what we had really interesting is, like I said, the range and a small cluster over here where there was a sort of absorption. Of course, this is the place where it takes another support I mean, it didn't move, the this move did not pan out, and of course what happened is what we can see. The other thing, when if you would have looked at the chart, is we saw a sort of aggression again happening here. That is the buy aggression. That is why you see these zones. That is why I was talking about that trade being a good one, and of course we got almost 70-80 points before we reversed, okay, and this is the second time we're breaking. And if you look at it now, when we have the footprint charts, you see why it hasn't been able to take out the lows as well. So you look at this part, okay, look at the number of sell orders, look at the volume, and look at where it takes support from. So that is why I have charts like these on with the volumes, and I don't you won't have the time, rather it will be a waste of time if you start looking at each and every bar. That is why you have these volume bars and these places where you can easily see why the market took I mean turned around from where it turned around from. So again, I have seen aggressive traders who, as soon as they see this and they see a delta flip, okay, now again I think I've done a video on this. Now it is too early. I would rather prefer to wait for a confirmation, but if you look at this point, okay, look at this huge delta that came in at the lows, and now this was a minus 930 again in I mean, if you consider the proportion, it is quite proportionate to this. You can also have the delta percentage down so that you get to know what was the delta, I mean, in comparison to the volume. Okay, so that is what delta percentage does. And the next time, in the very next bar, you see, of course, the sellers were there, and a push by the buyers, and the market holds up and takes out this place. Now, what we are facing resistance against is this point. Okay, so that is why the footprint charts are so full of information. Is the place where we saw the aggression from, that is sell imbalance, if you can see. And at the moment what you see is a lot of buyers trying to take the market up. If you look, the volumes are very less, so always be cautious of what the volumes are. At the moment the bar I mean is about to close, and the volumes are very less, and the volumes have been in fact dropping in this up move, if you see. Okay, so this is a tell sign. And of course, if you look at the bigger context, we want or we expecting the VWAP to be taken out, because there is a set of trap traders that are here, and we look at this getting these guys getting trapped in the POC somewhere here, which made us initiate a trade, okay, which was a trade idea that we would have entered somewhere here, because considering the POC that we saw on the volume profile. Now again, if you're trading futures, it is very good. Let me go into the options chart, where exactly is the place you enter a trade. Okay, now look at these high volume bars is where you start building a context. And if you have straight away, when you see this, what do you see? Okay, look at these places, this place. Okay, look at the number of this is second time, and look at the cluster of volumes that is here, and the buyers that have got trapped in this zone. Okay, so this is when you are looking at options and you have the profile charts as well, that is the footprint chart, you can see clearly that a lot of I will delete this so that we can see it even more clearly. And where is this? Okay, there is a delete. Now it has come and tested, and if you look at these red continuous lines that are, or rays that are coming, it is because of the POCs that get extended, like we discussed in our last videos, and they've got extended. And if you go back and check it, it would have been from a very high volume place. This is why they get extended that long. Otherwise the low volume ones are generally taken out quite fast. Okay, so when I see this something like this, I would like to enter whenever the price drops below this POC, or even at this place where the exact entry would have been, if you look at this chart. Okay, and it would have been somewhere close to 314, 310 when I see that the these guys. Okay, let me just get this again, the chunk is here and these guys getting trapped. Okay, so I would have entered somewhere close to 310, and of course the stop loss can be, if you're looking for 15 points, just above this zone. Why? Just let me get this. Why? Because if you see beyond this, there were buyers who got trapped. So again, I do not want the price to go above 330 at any case. So if I'm entering at 330, 325 to 330 is the range where I want my stop losses to be. Again, 1:1 would be somewhere close to 3 and 305. And I generally look for, if it's a 15-point stop loss, I would try and target 25 points. And the other thing I consider is, when I look at this chart, where do you think this thing can take resistance? Okay, so again, I'm talking about selling that option, although it is not selling in the sense that a lot of people consider that is selling deep out of the money options. I'm selling and in the money option because I want uh, the move or the number of points that I want to be there. Okay, and when I would have targeted this as my first point. Okay, and I'll just tell you this one. Okay, so again, this is not on very high volume, but still. And what is why am I considering this place? I will just show you. So if you go back a little time back, so if you look at this, this is the bar where the volume or the buying started coming in, and this is the place, this high volume bars, these two of them. Okay, where the market did try to go down. Even this bar, the cluster was here, it did try to go down, it failed, and the market moved up. So again, of course, I have to be wary of the fact that I am going to face resistance over here. The next time I see is this high volume bar testing, the cluster being here. So my again the target would have been somewhere closer, but then what happens is, the next time the bar does take out this low, and a sort of trap traders are seen in this bar. So that is how I build my context, and that is why I would target my, till here, and I'll start getting aggressive with my stop loss after this point. So obviously we've got, I think, more than 25-30 points, or maybe 25 points, 15, and yeah, we've got a 25 points if we would have entered at 310 somewhere here. And if I see a bar with high volume, of course, and the other thing that we see is the volume dropping. Now if I see a volume it's going down in our favor, and see, it's just touched our place, and you see these traders getting trapped here after the touch. This is where I start getting a little aggressive. Okay, with my stop loss, what I will do is I'll trail it till let's say even a lesser, 85, 88. And because if these guys get trapped, I'm going to get a move back again to the level where I entered. Okay, so that is why I do this. I do not want to see and you see the pickup in volume suddenly, and let's see how much time is there, 6 seconds. Okay, so that is what we are expecting. And if you see on the bank nifty futures chart as well, why is it that these areas coincide? Is, you look at this, this was another volume area, high volume node coming from back in this bar, of course, where the attempt to take out the bank or the attempt to take out or test the VWAP was made and failed. So that is why we match these areas, and this is the place where I would have entered. So it's almost 35 points, and like I said, we start getting super aggressive here. So just below this POC is 285 is where I would enter. Ideally, you should be, if you're not conservative or if you're ready to wait, ideally it should be above the POC. But since we've got our points and we do not want to, and considering the volatility that happens in bank nifty, we tend to generally be more aggressive. So hopefully I was able to convey some of the information that we can derive from the footprint charts and the volume profile in a real a live scenario. So until next time, guys, thank you, bye bye.